I think if gold can push above US 1350 an ounce, then it's very likely to push up into the 1400 range and above.
Jordan, welcome back to Dukascopy TV. It's a pleasure to receive you.
Always happy to be here.
Thank you so much. Okay, so let's take a look at gold in that post-Brexit fallout. And actually, gold hasn't really seen that much of a fallout, but more a fall in. We've seen rallies up to 7-year highs sort of post-action. How are you sort of feeling all of this?
Yeah, well, the interesting thing was obviously gold, like most markets, had priced in a Remain result from the referendum. So we saw gold prices ease for the few days leading into last weekend, or sorry, late last week. And then obviously with the result going well against market expectations, gold prices have soared in all currencies, US dollars, obviously in sterling where it's over £1,000, and even in Australian dollars here where at one point it went above $1,800. So look, it's been a fabulous time for anyone long precious metals, which is a continuation of the trend from the entire year. Gold had been the sort of strongest performing asset between January and about late April anyhow. So the entire year's been good for precious metal investors, and I think that'll continue.
One of the interesting things of note here, at least here in the domestic Australian equity market, is we've also seen shares in gold producers have actually been some of the best performers in the days since that Britain EU vote. Now, we've spoken previously about the divergence, typically speaking, between gold price and share price performance, but here we're actually seeing a correlation.
Yeah, that's right. I think obviously equities as a whole have been fairly weak. The ASX, I think, was down something like 3% on the last Friday. It's no surprise in that environment that with gold prices shooting that much higher, obviously the profitability of all the miners is going to go up as a result. So no huge surprise to see investors sort of rotate out of financials and into something like the gold miners. They are obviously very different investments. Obviously gold is a sort of safe haven, highly liquid asset that's uncorrelated to financial markets. You know, gold miners are at the right time fantastically profitable, but they tend to be a bit more of a sort of high beta equity market play. So, you know, there's room for both in a portfolio, but investors need to be careful how they go about it.
You touched there in terms of that safe haven status. Is this upside to the gold rally that we're seeing? Does it have some limitations on it? Obviously, naturally, we do see gold as a safe haven, but there's also been a lot of talk about that strong US dollar possibly coming through as a haven also.
Yeah, I think obviously there are times where a rising US dollar is often quite bad for gold. Interestingly enough, though, there's a real asymmetry about the relationship, though. So even when the US dollar rises, you don't always see gold fall, and if it doesn't always fall by a lot. Whereas when the US dollar's weak, you almost always see gold rise, and quite often by a sizable amount. I think the really interesting thing that we saw last Friday Australian time was that both assets were rising. So you saw the US dollar rallying and you saw gold rallying. They're both safe havens. Yes, they can compete with each other for capital at times, but they can also move in the same direction.
So Jordan, walk me through some of the price points that you're seeing then in the mid to long term.
Yeah, look, if I sort of limit it to the next 6 months to start with, I think if gold can push above US 1350 an ounce, then it's very likely to push up into the 1400 range and above. Expect the cash rate to come down in Australia and therefore the local currency to be under pressure. So there's a good chance by Christmas 2016 we could see an Aussie dollar gold price of $2,000 an ounce. Having said that, the market's a little bit overbought right now, so it could well take a breather. Medium to long term, I'm obviously more bullish than that. So I think it's an asset that investors should have some exposure to in their portfolio. Obviously, the level is different for each investors, but the fundamentals driving the gold bull market are all still very much in place, and if anything, have only been strengthened by what took place in the UK last week.
Do stay tuned to the Dukascopy TV team as we continue to bring you commodity insights for the year ahead. I'm Natalie MacDonald. You've been watching Sydney Direct on Dukascopy TV. Goodbye for now.